Hello and welcome. You're watching Your Trades on ET Now. I am Snehi Shah. With me is Shrishti Sharma. This is the weekly edition where we are going to be summing up all the action that we've seen over the course of this week. And nonetheless, this being a truncated week, we still had a lot that was happening in the market. But well, it looks good for our market, at least given the way today's trading session has been for us, because we've managed to hold on to all of the gains that we had seen on the Nifty, on the Sensex. Broader markets have held up pretty well. The advanced decline ratio was rather strong today. So Friday's trading session looking very good. Nifty hit good levels this week. But if you talk about the overall basis, then you had Nifty FMCG that was the biggest winner over the course of the week, a 3.5% uptick coming in, followed by energy. In fact, these were the only two indices that were in the green this week, and that also on the back of the action that we've seen today. Over the course of the week, Nifty Realty and Nifty Metal have been the biggest losers with cuts of 4 and 3% respectively, because remember, before we went on a holiday on Thursday, Wednesday's trading session was quite tumultuous for us on the back of the tariff tirade that we've been seeing globally. And speaking of that, just today, a couple of hours ago, we had the update coming in from China, wherein first US has imposed a 145% tariff on them, and to retaliate to that, they hiked their tariffs on the US from 84% to 125%. So that's a news flow that is keeping the markets on its toes today. But luckily, we have not been impacted much by that today. In fact, not at all. And we've done very well over the course of the week as well as today. However, despite the move that we've seen today on the market, Nifty has ended in the negative over the course of the week. A 0.4% cut coming in on the Nifty. Similar for mid cap, 0.3% cut, and small cap on the other hand, that has been outperforming the market on Friday as well as over the course of the week, has ended with gains of just 0.1%, but small cap has ended in the green for the week. And let's talk about some other big news coming in other than tariffs. You had oil that was down for 2 straight weeks, and the dollar has also tumbled on the back of that. Action back home, we had policy, we had a lot of numbers that are expected to come next week, but this week we had TCS that came out with its numbers, the first IT bellwether and the first Nifty 50 company to kickstart the FY25 earnings. So lots has happened over the course of the week, Shrishti.
Well, certainly a lot of news that we have been tracking, but well, of course, the upcoming week is seen to be a bit truncated, but action is expected nonetheless, because it's Trump all the way. Definitely every day is almost a new day with the Trump taking in charge, but a lot of moving parts for the market. But as an investor, what should be your strategy? Let's try to decode that with two of our very special guests joining us on the show right now. On the technical front, here to guide us is Rajesh Palvi of Axis Securities, and Sudeep Bandyopadhyay is also with us. A very good afternoon, gentlemen, and thank you so much for your time. First up, Rajesh, let me come to you, because a very volatile week for the benchmark indices, but at least the last trading day of this particular week ended on a very good note. But how are you looking at the market movement right now? And at this point in time, what will be your strategy on the index front? Will you completely stay away, or rather try to build on some positions? You have to unmute yourself. I guess there's a bit of a technical glitch with Rajesh line, but we were definitely trying to get his sense that at least on the index level, at least on the numbers, what is that the markets are looking at. But Sudeep, let me have your take in terms of the direction for the markets. As of now, do you believe that the direction is clear? Maybe we have already made a near-term bottom is what the other data points are suggesting, what the bond yields are telling us, the kind of cool off that we have seen in the oil prices. Does that bode well for the Indian markets? And what is your sense in terms of the direction?
Well, as things stand now, I think things do look stable from an India point of view. And if there are no major negatives coming out of US administration, I think we have probably seen the bottom as far as short term is concerned. And the trajectory for Indian capital market should be positive. Of course, we will be tracking the corporate results, which will come thick and fast from next week onwards. We also will continue to track the progress of monsoon and predictions around that. So I think these are the two things which we normally track at this time of the year. Of course, the Trump administration's tariff-related issues and announcements will keep all of us on tenterhooks. But assuming there are no major negatives, as far as pharma is concerned, because that's one thing which is like a sword which is hanging, because Mr. Trump has gone ahead and mentioned a couple of times that big tariff is going to come on pharma. Let's see what happens. If that does come, it will have a significant negative impact on Indian pharma companies and in turn on Indian markets. But otherwise, I think we are reasonably safe as things stand today.
Sudeep, thanks for that view coming in. That's where we are expected to head, at least into the next trading week in the next couple of months when it comes to our markets. But Rajesh, hi once again, welcome back to the show. And just wanted to get your sense on what Shrishti asked you earlier. What are the levels that you are spotting for our markets headed into next week? Because, we have a truncated week, and it's not only one that we are off 2 trading days. We only have a 3-day working week next week. Do you think that is going to shelter us enough from the kind of volatility that is expected to take place now that China has also hit back at the US in terms of tariff? Do you believe that our market staying closed is going to be rather better for us compared to how the global markets are going to be faring on the back of this tariff war? And when we do open up on Tuesday, given up all the pent-up action that we will be seeing from the long weekend, what are the levels you're spotting?
Good afternoon, Sneha. So, despite of news flow from the global front, our market managed to give recovery from the lower level. Almost we have tested the level of 21,700 kind of zone, and we have retested this 100-week moving average on a weekly chart, and able to defend that 100-week moving average. So we have slipped below to this 100-week moving average only at the time of COVID, and post that whenever the Nifty tested these levels, we have seen very strong recovery from those levels. So same has happened again in the current week also, and on a weekly basis we are able to defend that level, which was at around 21,700 800 zone. So I think these levels are very important. Now we are very far from those levels. Almost we are now negotiating with the immediate call concentration area of 22,800 23,000 level. If at all we crosses 23,000 level, I think we may see another round of rally to continue further in the coming week. So China and US, this tariff war will keep on continuing. Every day we are going to have new news flow, but the broader our broader market has shown a strong recovery, and the oversold sectors are also participated in this rally. So we believe that this momentum can extend further. So at this juncture, 22,600 needs to keep as a stop loss to hold long position, and we believe that maybe in next week we can cross 23,000 level, and possible rally can extend to 23,500 also. Bank Nifty is looking very strong. Bank Nifty is now trading about to 200-day moving average. So whole banking and financial sector is in a different mood, and I think the way this sector has shown resilience in this kind of volatility, I think we may see a extension of a rally in the bank Nifty, and a possible rally can extend to 51,700, even 52,000 kind of level also. So in Bank Nifty also, we are holding bullish view at this moment. Keep your stop loss around 50,600 to hold long position in Bank Nifty also.
You can hold your long positions in Nifty as well as Bank Nifty, but with a stop loss indeed at place. And Rajesh also talked about the level that he will be watchful of. But Sudeep, just wanted to have your take on the earnings season, because we have already started the earnings season with TCS coming out with the numbers first. But overall, what is the sense that you are getting on the IT space now that the recessionary fears in the US market and in the US economy still persist, and what we have seen from TCS, despite not a great set of numbers, the company is optimistic about FY26, at least for the select segments. But overall, what's the sentiment that you are catching up when it comes to the IT earnings?
Just overall IT segment. Look, the possibility of a recession or slowdown, whichever way you may consider, is real. Every US large corporation is holding on to their decisions. Even TCS, I think the commentary they mentioned that a lot of these project implementation decisions are on hold. I think that's bound to happen with this kind of uncertainty which is prevailing in US. It's quite natural that US large corporations will hold back their decision to spend at least for the time being. So as far as Indian IT is concerned, the Q4 numbers will be by and large in line with what is being expected. Nothing great, but not too bad either. But the fact is, all these companies, I think, will refrain from giving a clear guidance because they're not sure. Nobody's sure what's going to happen in the US going forward. So I'm not sure so much about FY26, what's going to happen. I think things will develop over the next few months and we'll be able to comment only then.
So, well, that's a near-term take on what we can expect on the earnings front, especially IT. Rajesh, I just want to extend that point on IT with you. I saw a very interesting post that you've uploaded on LinkedIn just last evening, wherein it says that in the last, out of the 22 years, it's only been 8 times that IT sector has posted yearly negative returns. I believe we're in for the 9th time this year, given how the tariffs globally are playing out. And because IT is such an external facing sector for us, how do you think it's going to pan out for IT? And also, what are you making of the entire overall Q4 print? Where do you believe we can see good numbers this time?
So looking at the IT structure, IT index structure, it's trading below to all its long-term moving averages. So structure is definitely on the weaker side, and concerns are still there for IT sector as US recession issue could trigger further more sell-off. But looking at the recovery in broader market and IT stocks now, large cap IT stocks are showing some bit of buying interest at lower side. So I think we may see some consolidation from current level in IT index as well as in the IT stocks for some time. If any further more fear escalate in terms of recession or in terms of global uncertainties, then I think we may see another hit in IT stocks. But for some couple of weeks, I think some pullback action could be there in IT stocks. 31,600, 31,700 are the important level for Nifty IT index. If it breaks that level, then we may see some more, major sell-off in IT stocks or IT index. Till the time this levels are holded by this Nifty IT index, I think some pullback of 2 to 3% or another 4% kind of up move we may witness in IT stocks, as we are almost corrected 33% from the recent high of IT index. And I think the similar behavior we have witnessed in year 2022, and the same kind of chart structure again replicating in the current calendar year. So 31,600 needs to keep as a stop loss. Again, post earning of TCS also we have seen muted kind of behavior. So I think once this quarterly earning happens, I think if stocks able to digest all the supply pressure in the range of 1 to 2%, so I think one can take a contra bet in IT stocks with stop loss of 31,600 as a Nifty IT stop loss. And I think if it's defended, some rally can be expected in coming week for IT stocks.
We'll definitely watch out for that. But Sudeep, the other sector that was seen to be catching up the rally was the FMCG basket. Though because within consumption, the view till now was to stick with the discretionary and leave aside the staples. But given so much of noise, what's been happening globally, people are now finding the safe havens, or rather some of those bets which are less volatile, which are more domestically linked. But do you believe that maybe looking at FMCG staples make sense at this point in time, or it's just a rally that one should not take very seriously at this point in time?
Rally which one should not take very seriously. There are a lot of challenges still as far as overall FMCG pack is concerned. We did see the commentary of Dabur last week, or earlier this week rather, and it was not at all promising. In fact, there are still challenges in pockets on demand, and it'll take some time before I think things stabilize. Of course, it's a safe haven if you're considering the tariff war, but that in itself doesn't make FMCG an attractive buy. If somebody has to look at pockets of reprieve, pockets of relief from this tariff war, one can look at power sector, one can look at maybe construction infrastructure segments, one can look at defense electronics. There are multiple other good quality stocks in sectors which are not getting impacted by this trade war. So it's better to hunt for bargains there rather than FMCG.
If you coming in, Rajesh, coming to you, I'm just looking at the FII data on the month-to-date basis, year-to-date basis. While there have been massive sells, DIIs have not only matched that sell with a buy amount, but they've also outperformed how much the FIIs have sold in terms of how much the DIIs have bought. Do you believe that this kind of correction that we've seen recently, have we bottomed out for good? Do you believe that this DII buying that we're seeing in the market could also be closely followed now by FIIs making a comeback to India? Because if you take a look at the AMFI data that we've seen today, equity AUMs and the way that they have gone up despite this correction, it shows that at least on the retail front or the DII front, the dip is being bought. Do you believe FIIs would do the same anytime soon?
FI needs to participate in market where stability is there. So I think India is the choice for them. I think once I think this clarity on the tariff front will emerge in coming future. So I think FI may come back to India because here they will get stability in terms of growth. Corporate earnings are also not that much negative. So it's again decent kind of corporate earnings, and the government has taking all proactive actions whenever required. So I think if they want to deploy where the economy is in the upward trajectory, so I think India is the only spot where they can participate. So yes, the way domestic flows are buying all the sell by the FIs. I think the kind of confidence which domestic players are having on the India growth trajectory, I think in the near future, yes, FIs flows will also turn out on the positive side, and if that happen, then we may see very sharp up move in the market, and then possibly we could cross 24,000 level also. So, but it's again depend when they will come back. But I think looking at the flows, I think in coming month probably they can convert their selling into the buying side, and I think that rally then we may see a good rally in the markets.
Big statement. Let's watch out for that. But Rajesh, the another big trigger for the India growth story that's turning out right now is the oil prices. What a cool off we have seen in the oil prices globally, and we all know that how big a booster or rather a trigger it could be for India as an economy and as for the markets as well. But at this point in time, Rajesh, help us understand that are you looking at some of the crude derivatives or crude linked sectors where maybe it's a time to build some good long positions, since you're also positive on the markets overall? Some of the case in point could be ONCs, the tire companies, the paint companies, anything that's structurally on the technical front looking good?
So definitely oil marketing companies are showing good traction. Hint Petro is looking very promising. Stock is now trading about to 200-day moving average. Flag pattern breakout is already there on the daily chart. So I think yes, oil marketing company can be looked at this juncture, and we may see a good rally in this stock. So Hint Petro is our first choice, and then BPCL. Both stocks can be looked at. As you mentioned about the paint company, I think here Pidilite is looking attractive, as well as Berger Paint. These two stocks are looking attractive from this segment, and I think these two stocks can do well, as technical structure for both the stocks are looking promising for near term to short term perspective. So I think here also one can focus to play on the fall of this crude.
That's a take coming in. Sudeep, we'll come to you. Any sectors that are looking good right now, ones that you would advise our viewers to invest in, to A, like you said, shelter from this entire volatility that we're seeing, B, on the earnings front where we're expecting good earnings, and C, just overall headed into next week, what's looking good?
as far as sectors which can be considered for investment from purposes, I think power is one sector which is completely sheltered from this tariff war. There is a structural positive in power sector in India, and that's going to continue for the next 5-10 years. So if somebody is willing to take explore, NTPC, obviously the leader in the generation, definitely looks good at current levels. You can look at the power financials, PFC, REC, IREDA, all these look good at current level from a 1-year hold perspective. The other segment, which I'm positive, is construction and infrastructure. I think the government of India is going to spend 1 lakh crore per month, roughly, based on their capital expenditure budget. Now, with that kind of money coming in to get deployed through these companies, I think it's a significant opportunity. And the leader of the pack, Larsen and Toubro, definitely can be looked at. If you're talking about short-term earnings-related benefit and the what's happening in the currently as far as oil prices coming down is concerned, I think tire companies definitely deserve attention. The raw material cost has significantly come down. That will help them improve their margins and performance as we get into the quarterly result season now. So whether it's an Apollo tire or Seat tire, and even MRF can be looked at from a from a perspective of investing at current levels.
All right, Sudeep, thank you so much for your take. We'll definitely watch out for those sectors. But Rajesh, help us with your stock ideas as well.
The two stock ideas. First one is PNB Housing Finance. Since last is showing in terms of buying. There is a long built up in data. The way stock has moved up in last couple of weeks and breakout is already there on weekly chart. So we believe that here we could see extension of rally. Possible target towards 1025 we may see in the coming week with stop loss of 960. Another stock is Grasim. Falling trend line breakout has been witnessed on the weekly chart, and the stock has also witnessed a long built up on the derivative data. We believe that here also we could see good traction towards 2710. So Grasim can be looked at for buying side, and keep your stop loss around 2625.
Thank you for that recommendation of stocks coming in. But on that note, Sudeep and Rajesh, thanks so much for joining us on the weekly edition of Your Trades, and thanks for sharing your views, sectors as well as stocks. On that note, we'll let you go. But viewers, time to wrap it up on this edition of Your Trades. Shrishti, next week 3 working days only.
Yeah.
Seems like it's going to be a break for us, but let's see if the markets can catch a break from the volatility. We'll see you on Tuesday. Have a happy long weekend.